Hello, this is Steve Malone with Compass FX. Hope you're doing well today and again some good trades. For those of you who are position traders and you've been monitoring the euro dollar, I mentioned in a previous video that the euro dollar had broken a significant trend line seen on the monthly charts, and I've drawn it here on the chart here from this low to this low. A few days ago the euro had broken that level right in the neighborhood of about the 128 level, had broken that, and the close below that would lead to some additional shorts in the marketplace. Well, given the recent news that Greece may leave the Eurozone, we've seen the euro dollar continue to slide down. And we see now on the weekly chart a head and shoulders pattern that is starting to break out and could lead to some potential movement all the way down to 122 or below. So for those of you who are position traders, make note of the certain levels that I'm going to mention in this video. And for those of you who are active swing traders, intraday traders, also make note of these levels and look for the market to attempt to reach these levels. Now, along the way, intraday, we're going to see some retracements. We're going to see the market test these levels and test retracement levels on its way down potentially to 122. So on the monthly chart, you can see the trend line that I've put on. We broke that. I went back in time and looked at previous monthly lows and marked these as potential levels of the market to get to. So what we're going to do now is go down to the weekly chart, look at that head and shoulders pattern, and there's the head and shoulders, the left shoulder, the head, and the right shoulder. And the neckline comes in right across here, right across that point right there. The market's breaking it, or the market's right at it right there. And so you can see the situation where we have a break of the monthly trend line to the downside. Now we're reaching down, and this larger head and shoulders, there's the potential for the market to start pushing down even lower. Now today we got down to 25.44. So we've already reached one of those monthly lows that was seen way back on the monthly chart. Now, where are these other levels that the market could go to? Let's go down to the daily chart and take a closer in look at these levels as the market could potentially move down. Now again, we hit the 25.49 level, then there's the 25.13, 24.56, 23.88, 23.29. These are all potential levels that the market could reach as it continues its push down. Now then, what I want to do now is simply look at this daily chart, and I want to take it from the swing low, the start of the neckline low, from that swing low to the swing high. Let's see if we have some confluence of our fib levels with these price points. You can see that the 127.2 comes in at 23.91, and we have a target here at 123.88. Well, let's look what the 141 is. The 141 comes down to 22.69, a little bit below one of those monthly levels that I was looking at. And the 1618 goes all the way down to 20.94. So those are some potential levels to see the market work down to. Now let me jump back out to the monthly chart, and let's take a look at where the market could potentially go if we break these levels. This low point right here is 21.93. So if I put that 21.93 there, we can see that it resides right in between the 141 and the 1618 based upon the swing low to swing high projection of where price could potentially go based on the weekly. This low point on the monthly sits right at 21.42, and it gets closer to that 1618 that we have. So at this point, my thinking is, if I was down on a 4-hour chart and I had these levels laid out and I'm considering where could the market potentially go to, I would go to the intraday swing low to the intraday swing high, and I would start marking out these levels. There's the 1618, the 200 real close to this level, the 233, 23.98, and the 2618 comes down to the 123.46 level. So in this area right here, start marking out where your fib levels and the monthly previous low levels, there's some confluence, and that's where the market could potentially go to. Now granted, as the market moves down, we're going to have situations where we're going to get some retracements that are going to take place. So look for any low point and look for the retracement back up, and then take a fib projection off of that, simply taking your fib retracement tool from the swing low to the swing high, run it in reverse, and look to see if it gives you additional confluence on these lines. Now taking a look at the Traders Dynamic Index, we can see that the current market price activity has dropped below the overall market. So there's a potential that this could roll over and we could continue to slide down. Just make note of these levels that I've laid out and where the market could potentially go from here. Well folks, this is Dean Malone with Compass FX. Hope some of this information will help you in your trading. Again, this is a big bird's eye view of where the market could potentially go to. But if it drops below this weekly head and shoulders trend line and stays below it, we're on our way potentially down to 122. Well folks, y'all make it a great day, get some good trades, and we'll talk to you next time. Bye bye.